All right. Morning, everyone. Let's get going. All right, let's kick it off. Last night we had a power set of numbers out of the U.S. We had we had U.S. non-farm payrolls, we had jobless claims, we had ISM, we had unemployment, we had everything because of the fact that today is a major holiday in the States. They pushed up the data that was supposed to be today. We obviously got all that data yesterday. So we got our non-farm payroll number, which is normally that Friday number on a Thursday yesterday. Huge beat. 288 versus expectations of 215 follows on the back of the prior day's ADP number. That was also a huge beat, really bullish for the U.S. economy. We also had the unemployment rate that dropped from 6.3% to 6.1%, and the expectation was for it to stay at 6.3%, another really big positive. I think if there is one thing out of the whole data set yesterday that was a little bit negative, it was probably the wage growth numbers that were there was no wage growth. We had wage growth that came in line to prior numbers, and I think the bulls were really hoping for a tick up in wage growth. So that's, if you're looking, if there is anything that wasn't extremely positive out of that data series yesterday, it was that. But other than that, very positive. We have Goldman Sachs, MetLife, some of the large caps that were really traded well yesterday, and the market really just put in a real solid performance after running the last few sessions and consolidating yesterday. We managed to push up about 0.75%, 0.2% on the major indexes. So in Asia, we had a follow-on in the back of the U.S. for the most part. Shanghai couldn't stay up, and South Korea was also down a touch. But bottom line is, we had a little bit of a following of what happened in U.S. action. No real leadership out of the area, probably just kind of following on the heels from what happened in the States. So nothing we really pay too much attention to there. Overnight. The real interesting chart here that we got from Societe Generale, and showing the U.S. and European equities and the average stocks price to cash flow. And you can see there, if you're going back historically, looking over the last 25 odd years, you can see that we're at very elevated peaks in terms of price to cash flow. So we all know that we're kind of at the expensive end of the range. Doesn't matter. It doesn't mean this can't continue to go on for another 6 months. It doesn't mean it can't continue to go on for another year. So I think it's just important to note. When we show a chart like that people could take as uber bearish. It's just something to give you some thought as to where we are in the big picture. Doesn't mean the market's coming down the next week. All right. No corporate action to report out for the day today. We have a lot less data out today and only some European data. We have factory orders in Germany that was out a little while ago. We've got retail PMI in the Eurozone, in France and Italy and Germany. So I think very little to follow for the market data that's going to be out today. There's no corporate action to speak of. We've got a major U.S. holiday in the States. I can tell you that second half of the day yesterday, most of the guys would have probably been out to the beach already or on the way to the beach. I think I would expect today to be an exceptionally light day of volume, and I think we must play accordingly. So just be careful out there. You can get moves on very, very light volume and very erratic behavior because of the fact that there's just going to be such light volume around. So just be careful out there today and trade accordingly. All right, let's get into the maps. Actually got quite a few things to show this morning. The first thing I want to show is here. That's the U.S. 10-year bond. We've looked at the 10-year and the 30-year over the past few days in terms of the charts. What we're looking at here is the yield and not the actual bond price. And you can see here that we pushed up yesterday. And this long wick, if I zoom in a little bit further, sorry, we're looking at a 2-year chart, but you can see how big the move up was yesterday after the number, and I think that's really one of the keys that we're going to be watching over sometime over the next year. You would expect U.S. interest rates to be able to start climbing, especially as the data goes on. It's really, really incredible that, a data point like yesterday, it gets U.S. bonds, the U.S. bond market selling off, and then we end up rallying, kind of the whole afternoon session. And we're looking at the yields, so we're obviously talking about yields pushing higher and then starting to drift back lower. But either way, the point is that it continues to really be able to fail to punch through, no matter how good the data has been, and that's really, really important. And when you see that turn, when that turns, that's going to be a turning point in equity markets without question. It's the most important thing that we can all watch at the moment. When we see these sort of levels start to break, that's when we will see a paradigm shift in equity markets. So just keep that in mind. We'll continue to watch that on a daily basis. That is the most important thing to go on in equity markets at the moment. The second that money starts to get more expensive, it becomes an issue. And earlier in our session, because U.S. rates were starting to push higher, we also saw a real weakening in the rand. I think we weakened out to about 10.85, and you started to see some real pressure come in on our interest rate sensitive stocks. So that's going to also probably be a theme that'll play out over the period that will when we finally do get higher interest rates in the U.S. All right. Moving on to Billiton's. BHP Billiton very quietly yesterday making a new all-time high and closing high. We showed this chart 2 days ago, right after we sort of, we talked about it when it popped up above this consolidation here. This little long 2 months or 3 months of consolidation, and then once we popped out to new highs there to consolidate it on top of the consolidation, we broke out from there. That was where the real opportunity was. This thing I think has still got a significantly higher price target. I'd be looking for probably close to $400 to the upside on Billiton's on this breakout. So there's still some meat left on that bone, I think. If you look at Anglo's, I'm going to just show this one just to kind of reiterate the level. I do believe is at $288. Does that sound right? 288, 289, somewhere in there. That's where the level is in Anglo's. You can see that we wicked a couple times through there, but that's definitely where you want to peg the level. We're probably going to come up and test that sometime soon, I would expect, over the next few sessions. This thing was really weak and trading below $260 literally only a handful of sessions ago. We're already above 280 now. I think that there's been a definite shift in the the diversified miners as of late. You have had a huge rally at the copper price, rally in some of the other underlying metals as well, and I think that this thing could easily come up and test the 288, 289 level in the next few sessions. All right, let's look at CFR. CFR made a great breakout and dropped down to a 1 year, and I'll zoom in a little bit. CFR really made a breakout yesterday. You can see that we closed well off of our highs. And what we're looking at here, I mean, if you look at this on a closing basis, okay, so we really, let's get that one green, there we go. Okay, so we really broke out yesterday nicely above about 1230. And we traded all the way up well north of 13. I think we pulled back about a rand to close at 1226. We're really looking, we're right at resistance. I mean, call it 1230, call it 1240, somewhere in there. Definitely our level of resistance. And we'll be looking for a break up to the upside out of that. Probably looking for a quick $3 once we get up out of the outside of that. There's definitely more in it and when you look at the longer term, but over the short term, maybe we'll be looking for an initial 3 rand. And I think if we can just push a little bit higher, maybe get above 1230, 1240, and kind of start holding there, we can maybe start to build from there in CFR. All right. Let's look at MTN. MTN as well, you can see here on the longer term, I was really hoping this thing would pull back to 220, because 220 is really where I think major support is on MTN. It hasn't managed to get all the way back there. And as you can see, we've really just been flagging down. It's been a real controlled sell-off, kind of coming down a rand or so a day, and been more moving out to the right probably than anything. No vicious sell-off days or anything like that. And it looks like we've popped up out to the upside of this this flag pattern here at just north of 225. We closed yesterday a touch above 226, and this is a setup to take us to new highs. If we get a little bit of confirmation here, we can start to push up a little bit. This is another stock that closed well off the highs because of the selling that we saw at the end of yesterday's session. But bottom line is, this setup's looking bullish for us to go to new highs in MTN. Right, we'll look at Able here on the 30-minute chart, and you can see here, let's zoom this forward a little bit. We've got a little bit of a inverse head and shoulder setup here, and Able, and really looking like the neckline is right here at about $7. I like how symmetrical this whole thing is. Everything lines up beautifully right at the 7 Rand level. If we can pop above 7 Rand, this thing was trading really, really well yesterday until the U.S. data, which started to put pressure on a lot of the interest rate sensitive stocks, obviously this being one of them. But I think if this thing can push above $7, we've got some real upside here, and probably test up closer to 8 rather soon if we can get above 7 Rand. All right, and let's look at Bidvest. In fact, let's look at Barlows. They've both been really consolidating after some recent selling. Yesterday we had Barlows that pulled back and trading after trading well for most of the session. Was really trading. Really was pushed down hard at the end. We're trading up about 102. We closed all the way down near 100, and you can see how important this level is. And this chart it's unbelievable how perfectly all of the horizontal support levels just fall in line in this chart. You can just see there how it just works off of levels, and so that kind of gives you a little bit more comfort when you get involved here. We got to watch the 100 level. We got to watch the 104 level. That's going to give us a key, but it's kind of starting to look like it's in a little bit of a head and shoulder setup for the longer term. And if we look at Bidvest, you can see the same thing. I know we've shown this chart. We showed this chart about 3 or 4 days ago, but still consolidating here. You can see really making a consolidation between 280, 285. If we drop 280 on a closing basis, I think that Bidvest definitely has some reasonable downside here. And these levels, like I said, about Barlows as well, they're very well defined. So watch that 280 level. It's going to be key over the next couple sessions. That's it for today, guys. Thanks a lot.